I'm going to show you technical analysis of what happened in the stock market in 2015. Technical analysis really does tell us a lot about where the pressure is coming from in the constant battle between buyers and sellers. Here's a chart of the Dow Jones Industrial Average for 2015. It is a good representation of what all stock prices did last year. There are three items to note on this chart, and they are all pointing to lower prices in 2016. First off is the downtrend. It is normal for the stock market to go sideways or down for about 3 to 6 months before resuming an uptrend in a bull market. I believe it does that more often than not, but that's not what we see here. The market has failed to even reach previous highs since October. So we've got the high right about here, possibly here also. The market's been going down, channeling down on the top and bottom sides. And then it had a lower high here, and it's been downtrending since then. Definitely not a good sign. The fact that 2015 was nearly all sideways or down means the bull market that has been in place since 2009 is running out of steam. Second off, that huge sell-off that happened back in August, marked by the X there, definitely not a good sign. A gradual sell-off occurring over several months down to that level would have been much less indicative of trouble. But a sell-off that only took 5 to 6 trading days right here, all the way down to the 15.5 level on the Dow, definitely not a good sign. The third thing you want to see here is if you look at these vertical bars at the bottom, those are volume bars. The green volume bar right here, that is showing you buying pressure, heavy buying pressure. Normal buying and selling pressure volume is shown down here, and that's, normal. You see about the same down here. When you see a spike, that's heavy pressure, heavy buying right there. Okay, we only see one of those days in 2015. Since then, and that was earlier in the year, since then we've only seen 4 huge selling pressure. So that's 4 to 1. 4 heavy selling days compared to just one heavy buying day. So that's definitely not a good thing. Another thing that's noteworthy is that these selling days have all happened over a 6-month period. We haven't seen any buying heavy pressure days since last March. And so that's definitely another sign of trouble. And a fourth thing to note, even though it didn't happen in 2015, was a heavy selling day on the first trading day in 2016, based on news out of China, slowdown in manufacturing. So definitely these are all signs of trouble, and a wise investor will lower his or her exposure to stocks immediately. So consider yourself warned. For more knowledge and information about the stock market and to learn about the trading courses that are about to come out and investing courses, go to markettiminguniversity.com.